Clear understanding MACD part 4, MACD trading tips. Good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. The title of this video, once again, is Clear Understanding MACD, Part 4, MACD Trading Tips. MACD stands for Moving Average Convergence Divergence. In this series of video, Part 1 to Part 4, we are giving to traders clear understanding of the MACD indicators. What is the ultimate role of MACD? We have clarified that in Part 1. What is a moving average divergence, which is completely different from the price divergence, in Part 2. In Part 3, we were talking about moving average convergence. In Part 4, we will be talking about MACD trading tips. Now, before we continue, I want to clarify something very important for traders, which I said 100 times before. If you want to fool a trader, all right, it's very simple. You ask the trader to trade, okay, a distorted data. All right, what do I mean by that? So when you are day trading, for instance, live, your broker is providing you with a data, okay? But if that data is wrong, you will lose because you are trading something else. Which happens sometimes, but it's not that they do it on purpose, but mistakes do happen and the data is wrong. That's where professional traders use at least two sources of data. Now, the next thing I want to say to you is this. So we can fool a trader by making trader trade a wrong data. We can also fool a trader by making a trader trade something else. So suppose you are trading Intel, all right, and instead of trading a price, I make you trade a stochastic instead. So you are trading a stochastic you overbought, you sell, and stochastic goes down. In that case, you are trading a stochastic instead of the price. Or the stochastic is oversold, and you buy the stochastic because stochastic is oversold, not the price. The price was overbought, in fact, but the stochastic is oversold. But you buy, and then you lose because you are trading something else. Please do not get me wrong. The point I want to make here is that the best way to fool a trader is to make a trader trade something else. So coming back to the point that we are making here, is that we have learned now we have given traders a clear understanding of MACD. The reason why I'm saying this is that trader will learn about moving average divergence, moving average convergence, the ultimate role of MACD. But the most important thing that we are trading is the price. You get it now? Is the price. Yes, the moving average divergence will help us make better trading decisions. Moving average convergence, MACD, will guide us to make better trading decisions. But we must not keep our eyes off the ball, which is the price itself, the number one indicators. Now that I clarified that, we can move on. The next thing we want to say to traders, when we are talking MACD trading tips, so you are using MACD, you want to remember what the earlier wave trader always talk about, price structure. Now, we have simplified that, very simple. There are price structures. So for every price structures, we must design, okay, the corresponding or the most efficient strategy to trade that price structure. Now, I'm not straying away from the main subject. So, if, for instance, there is a divergence, a moving average divergence, okay, MACD is, there is a wide angle between MACD and the central line, which is alerting us that there is a trend or a trend is in place or a trend is about to start, which is the moving average divergence. We must always pay attention to the price structure. Now, if you listen to me today and you understand what I meant by the price structure, you will start using MACD like never before, like never seen before, okay? As I talked about it 100 times before, we talk about 3 market patterns. This is about the price structure. So though MACD, talking about moving average divergence, MACD separating from the central line or the zero line, I let you know that the trend is in place. One must always pay attention to the price structure. So you are taking any MACD signal. Remember that all technical indicators will give warnings, but the price must confirm the warning by giving us a direct signal. All technical indicators, including MACD, will give us an indirect trading signal. But by using or by focusing on the price structures, we are likely to use MACD like never seen before. So when there is a trend, my friend, and MACD is separating from the zero line, the price must be in a rising channel. Or if MACD is telling us that a trend is about to begin, but we do not yet have, okay, the rising channel or the declining channel, there must be a breakout. Now, I don't want to repeat myself, so sometime you will see the market will be separating from the zero line while the price is consolidating. So in that case, talking about the price structure, because at that point in time, we do not have the rising channel or the declining channel, we will now wait for a breakout. So we will look for opportunity to buy above. If you see here, it breaks above and pull back and retest here. So we are talking about here. Patience, breakout, retest. Sometimes you just break out and run away. You miss it, that's it. You didn't lose money. That's fine. All right? So the reason why I need to clarify this, we talk about moving average divergence, MACD diverging from the central line or the equilibrium line, and let you know there is a trend. But one must combine that information with the price itself, the price structure. If the information given to us by MACD is not yet in place, MACD say there will be a trend or a trend is in play, but the price consolidating, you will wait for a breakout or a breakdown. A breakout, what I mean by that, a bullish breakout or a bearish breakout. Bearish breakout is what we call also breakdown. Are you getting the message? So, for this part 4, remember price structure. During the trending phase, which MACD will tell you by diverging from the central line or the zero line, separation wider angle, as you can see, the angle between MACD and the zero line becoming wider and wider and wider. All right? You have watched part 1, part 2, part 3 already, so you know what I'm talking about here. If you have not yet watched that part, okay, go and watch it, and then you understand. So here we have a rising channel. So the market pattern is in place. So how do you trade during that time? Price structure. So I'm on the monthly charts, and the bank is telling me that there is a trend in place. Okay. Now we are going a little bit deeper now. Okay. Remember what we said before. The forbidden trading mistakes is the violation of what? The top-down trading method. You need to understand that. The forbidden trading mistake, if you apply to become a trader, a professional trader, and they are testing you, okay, and you make the forbidden trading mistake, which means you don't apply a top-down trading method, you will not get the job. You want to apply a top-down trading method. This is what we call the forbidden trading mistake. If you are recruiting new traders, you must test them for the forbidden trading mistakes. There are 7 biggest trading mistakes. Go to www.dayprotraders.com. So now, we are on a monthly chart. So MACD says there's a trend, okay? So on a monthly chart, we say there is a trend. We go to, for instance, we change time frame. We go to the daily chart. And the price is consolidating. What kind of strategy can we put in place? If the long-term trend is bullish and we see a consolidation on the daily chart, we will expect a bullish breakout unless the trend has finished. If the long-term trend is bearish and we go to the medium-term trend and we see a consolidation, we will expect a breakdown, continuation of the long-term trend on the medium-term trend. Am I making sense? Top-down trading method. But once again, as I say, part 4, price structure. So monthly chart, declining channel or rising channel or trending fast, medium-term trend, consolidation or correction. Remember what I said, price structure. I want to show you something, okay? But you can see that I'm a bit excited because today is Sunday, all right? And it's quite a nice weather in London now. And this subject of MACD, I'm quite, you can call me Mr. MACD if you want, by the way, all right? It's one of my favorite indicators. So don't think that, George, who are you to talk to me like this? I'm a bit excited, all right? Or maybe it's the tea that I'm drinking here. All right, so let's look at this stock, Intel, okay? You can see that MACD deviate from the central line for some time here. Price structure, remember, price structure, okay? Now remember what I said to you also, how to fool a trader. So if I want to fool traders, I'll make them trade MACD instead of the price. But I don't want to fool you. I want you to trade the price. That's what I'm saying. Price structure all the time. Top-down trading method, don't commit the forbidden trading mistakes. All right. So MACD was quite a way. There's a quite separation. That's why we talk about moving average divergence, not the price divergence. All right. So when we are talking about moving average divergence, it's different from MACD divergence. The separation was in place and the price was trending. So here you can see that we have a kind of a rising channel here. We are on the monthly chart. Can you believe that? Some traders never look on the monthly chart. But before there was a trend, what do we see? We usually see consolidation, trending first, consolidation, trending first, or correction, trending first, or pause, and then trending first. Return to the mean, separation, divergence. All right? Are you getting the message? Consolidation, breakout, trending first. Consolidation, breakout, trending first. Sharp correction, trending first, correction, consolidation, breakout. Return to the mean. This is what the price is doing all the time. Breathe in, breathe out. Breathe in, breathe out. So if the long-term trend is bullish, we go to the medium-term trend, we see a consolidation, we'll expect a breakout. If the long-term trend is bearish, and we go to the medium-term trend, and we see consolidation, we'll expect a breakdown. Some trader will say to me, oh, George, that's very interesting. 1 + 1 = 2. It will be always like this. But no, it's not always like this because we are talking about human beings. The market is changing all the time, and sometimes we have distortion. So the MACD is telling us here that we have a trending fast, all right? Now suddenly, MACD has peaked because it can't go up forever. Fundamental will peak, financial will peak, price will peak, become overbought, and MACD was overbought here. And MACD was now converging. There is a moving average convergence. Moving average 12 is converging to the moving average 26, which is the central line here, alerting us that the trend that is in play may pause or we may see a reversal. Traders that understand the Elliott wave theory at www.24elliottwaves.com will have counted their wave and may see that we are coming to the end of the multi-wave, and they may position themselves to make the right decision using the pitchfork tool to forecast the end of the multi-wave. So here, as you can see, moving away convergence. So we see this sharp correction, followed by what? A consolidation. Where is MACD? MACD is quite very close to the central line. In fact, MACD is oscillating around the zero line, telling us that, George, my friend, I love you so much. I'm giving you a warning that now we don't have a trending phase, we have what? A corrective phase, which is a consolidation. But a corrective phase is not always a consolidation. It can be a triangle, it can be just a pullback or a sharp correction like this, down, or or it can be a consolidation, it can be a triangle, it can be a consolidation. Just a pullback, a triangle, a different type of triangle, ascending triangle, descending triangle, expanding triangle, okay? Maybe just that, where the moving average is converging towards another moving average, or a consolidation. Here, Intel stock from 2003 up to today is still in a balanced market. Now, remember what I said at the beginning of the video, the price structure. Now, I want to add something else. The price structure commands trading strategy. All right, some traders already get it, but I want to say it again for new traders. The price structure commands trading strategy. What do I mean by that? So, when we see a rising channel, we must use the appropriate trading strategy for that price structure. Okay? When we see a declining channel, we must apply the appropriate trading method for that price structure. Now you can see that for God knows more than 10 years, Intel price structure on a monthly chart is what? A consolidation. A balanced market. We can divide this horizontal channel like this. But now, as I explained to you, the price structure will command trading strategy. So, if we are using MACD, we are using a stochastic, we are using the RSI, we must always pay attention to the price structure in order to use the best tool for the current market pattern or the current price structure. The same rules apply when we are talking about MACD trading tips. MACD crosses above the signal line. MACD crosses above the zero line. MACD is converging towards the moving average 26. MACD is diverging from the moving average 26. What is the price structure? The price structure will command our trading strategy. Now, how do we do that? We do that by using market stable data. I'll give you one example earlier on that if the long-term trend is bullish and we go to the medium-term trend, we see a consolidation, we'll expect, not that the price will definitely do that, but we'll expect a breakout to the upside. On the other hand, if the long-term trend is bearish and we go to the medium-term trend and we see a consolidation, we are likely to see a breakdown. Okay? The price structure. Another thing I want to say again, which I said earlier on, is that the price gives direct trading signal, command indirect trading signal. Direct trading signal, command indirect trading signal. So when we are talking about moving average divergence, moving average convergence, the ultimate role of MACD, we should remember that these information are warning. They are indirect signal, and the price must confirm all this signal. But remember, the bottom line, whether we are using a trading strategy or talking about an indirect trading signal, the price structure will command our trading strategy. Now, once we see the price structure, we build the appropriate trading strategy. We must confirm all indirect trading signal with a direct trading signal. Okay, now, talking about MACD trading tips, another thing I want to mention very fast. In this series of video, remember probably part 1 or part 2, I was talking about asking the correct question. Moving average 12 is diverging from the moving average 26. I said to traders to ask the question that what has caused the divergence? That will allow traders to make better decisions. Moving average 12 is converging towards the moving average 26, or more than one moving averages are converging towards another moving average. Ask the question, what has caused the moving average convergence? With this information, we are likely to use MACD more efficiently, asking the right question, paying attention to the price structure, understanding that direct trading signal command indirect trading signal, that the price is the number one indicator The price is the number one indicator. That's what we say to traders. Do not trade the technical indicators. Acknowledge the technical indicator and wait for the price to confirm, okay, the signal. The bottom line for all trading strategy or technical indicator, including MACD, the price structure will determine, okay, the trading strategy. I don't want this video to be too long, but before I close this video, you see I draw some line here. So the convergence of the moving average can be just a pullback. The pose that we are talking about, I don't want the video to be too long because I talk about it in part 1, part 2, can be just a pullback. It can be a triangle, ascending triangle, descending triangle, expanding triangle. It can be a consolidation. For Intel, MACD is telling us that the current market pattern is consolidation. This is the price structure. If one wants to buy and hold, for instance, in this scenario, because I'm on the, let's go into a kind of a demonstration now. So now I'm on the monthly chart. MACD is saying to me, consolidation is in place. All right. Acknowledge that, okay? I check the price structure. Yes, consolidation is in place. But there was a smaller consolidation before. Now the price break above and retest it here. If I want to buy and hold, because the fundamentals or the financials, Google Finance, Yahoo Finance is strong, fundamentals are strong, I want to buy and hold, where is the best place to buy and hold? Somewhere along this line here. Because of the what? The price structure. So for people who want to buy and hold, because the fundamentals are strong, will buy at the best place at $18.87, between $18 to $20, they will buy. But here it's a bit tricky because trader will look for opportunity to sell at the top here. So another trader may say, because the current price structure, MACD is saying to me the current price structure is a balanced market, I will wait for a breakout and I will wait for a pullback, and then before I will buy. Sometimes being a bit too patient can also mean that we miss some excellent opportunity. Okay? Or I may say, all right, the price is not coming here anymore, so another place I can buy is here. I'll buy and hold at $27 because this is the median line. The price may go like this, up. This is a consolidation here. It breaks above the smaller channel. Let me say a pullback near this level. I'll hold it there and see what will happen because the fundamentals are strong. Another thing I need to say to traders, for MACD crossover, crossing below or above a signal line, you must also ask the correct question. What has caused MACD to cross below a signal line or above a signal line? What has caused MACD to cross above the zero line? The best approach for using MACD, moving average divergence. If we want to trade moving average convergence, we want to see first divergence. Moving average divergence before the moving average convergence. If we want to trade moving average divergence, we want to see first moving average convergence before the divergence. This is the normal progression of the market. As you can see here, we see consolidation, trending first, consolidation, trending first, end of the trend, correction, consolidation, waiting for a new trend. As I explained to you, the moving average convergence is not only talking about a consolidation, it's talking about just a pullback, a triangle, or a normal consolidation. The moving average divergence is referring to trending assets. The moving average convergence is referring to assets that are consolidating. So another thing that we can say is that when we see moving average divergence, it's alerting us about, okay, a trend in place. We pay attention to the price structure. All right. We will, if the price structure is a rising channel, what do we need to do? That will command our trading strategy, which means we'll say priority to what? Bullish signal. if the price structure, talking about moving average, diverges in a downtrend, if the price structure is a declining channel, we will say what? That will command our trading strategy. Therefore, we will say to trader, priority to bearish signal. But if we see a convergence of moving averages and the market, the price structure is a consolidation, we say, look for opportunity to sell at top of the consolidation and look for opportunity to buy below the consolidation without committing the forbidden trading mistake, the violation of the top-down trading method. At the end of the day, my friend, it's not all about technical trading. It's not all about MACD. It's about combining the technical analysis with the fundamental without ignoring the economy news. This is the end of this series of video about a clear understanding MACD part 1 to part 4. In part 1, we were talking about the ultimate role of MACD, which is to pinpoint trending and non-trending financial securities with the moving average convergence divergence. In part 2, we have clarified with traders what is the meaning of a moving average divergence. It has nothing to do with the price divergence that we usually see when the price will display a lower low and a financial and a technical indicator will exhibit a higher low, which is a bullish divergence, or the price will exhibit a higher high, and the technical indicator will exhibit a lower high. This is a bearish divergence. It has nothing to do with that. The moving average divergence is about the separation of moving average. The angle between two moving averages is expanding something. There is a force that is causing that. It can be a bullish force or a bearish force that will create a trend. If MACD is alerting us that a trend is about to begin, but the price structure does not confirm it, we will wait for a breakout or a breakdown. If the long-term trend is bullish and the medium-term trend show us a consolidation, we will expect a continuation without assuming anything. Top-down trading method do not commit, all right, the forbidden trading mistake, a top-down trading method. In part 3, we were talking about moving average conversion, where moving averages coming together, okay, alerting us that the price may pose just with a pullback or a triangle, expanding triangle, descending triangle, okay, or a consolidation. We may see many moving average grouping together, coming together, all right, and that will also alert us about a pause, a correction, okay, after a trending first. If you want to know more about MACD clear understanding, go to www.stochastic-macd.com and click on clear understanding MACD. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. If you like this video, please give us the thumbs up. If you dislike it, please make sure you give us the thumbs down. It does not matter. But if you love it, feel free to share it on Google+, on Twitter, and also on Facebook. If you love our video, well, feel free to click the subscribe button. There are more videos that we'll be recording throughout 2016, and more tutorials will come. Happy trading to you all, and I'll speak to you soon. We are the TSTW 24 traders talking about clear understanding MACD Part 4 MACD trading tips. Speak to you soon.